hide your kids, lock the doors. You're listening to HR's most dangerous podcast. Chad Sowash and Joel Cheeseman are here to punch the recruiting industry right where it hurts. Complete with breaking news, brash opinion, and loads of snark. Buckle up, boys and girls. It's time for the Chad and Cheese Podcast.
Oh, yeah, it's the Grinch's favorite podcast, a.k.a. the Chad and Cheese Podcast. I'm your co-host, Joel Cheeseman, joined as always, the Rusty to my Clark, Chad Sowash is in the house. And this is the Chad and Cheese Podcast, does data, and as always, we have the Ayatollah of analytics, the Bigfoot of big data. Toby Dayton is in the house, CEO of LinkUp. What's up, boys?
Oh man, another day, another dollar, and another jobs report.
That's when Chad's gone for a week. The pent up intros that I have to like stuff down until it comes out. So. Ooh, I feel so much better. So much better.
Ooh, now he's spent. Now he's got to go take a nap. That's the problem. That's the problem, Toby.
That's true. Let's keep this tight.
Another day, another dollar, another jobs report. Let's just jump right into this, my man.
Yeah.
Run down that jobs report for us.
Yeah, perfect. Let me pull up some summary thing. It was a very good. It was definitely a good jobs report. I think came in a little bit higher than expected. Sort of the top headlines, up just about 200,000 job gained in November, above consensus. Big gains in healthcare and government. Leisure and hospitality was another category up. Retail was down, and the unemployment rate dropped. So things are very, very positive on all fronts. Wages are up. About 500,000 people came into the labor force. So
yes,
still people coming in. So it was really just a fantastic report, and by all measures.
All right. Gotta love it when that participation rate comes up, right? I mean, we talk about a lot about the jobs itself, but the people actually staying back. A lot of the women stayed out of the workforce coming out of COVID. A lot of the return to office pull back, and women have just not come back in the workforce. So do we know gender wise if we're getting more women? I would assume that it is more women into the workforce, but these numbers are great just from a participation standpoint.
Yeah, it is. And I think it is. That's one of the key demographics. I think it's pretty much across the board it's just this continued long running theme of normalization in the job market and the balance between supply and demand. And as employers have raised wages and made accommodations and really done everything they can to get people back to work, it's working. And so people are coming back in, and you see that in the resilience and strength of the job market really continuing to surprise to the upside pretty much all year. And it's just people are coming back in to take advantage of what employers have done to attract workers.
So now we actually saw Julia Pollack, the chief economist over at ZipRecruiter. She said that just 3 sectors added 96% of all jobs in the last 6 months. That's a huge amount of freaking jobs in 6 months. Can you dig into that a little bit deeper?
Yeah, well, and it came through in this number too. This month, it was healthcare, government, and leisure and hospitality are kind of the big drivers of job gains, and so I think leisure and hospitality and that has been a huge just insatiable demand for services and things that consumers are spending money on, and trips and travel and experiences. Those kinds of things just continue to really buoy the economy. I think healthcare and government are more really just sort of steady bedrock. There's just persistent shortages there, and so I think as the job market continues to normalize, those sectors are just filling in the long running demand that they've had and the shortages they've had. So I'd expect that to continue to add some buoyancy to the job market going forward. Definitely.
Yeah. So real quickly, Toby, and I know we'll get to like the flip side of this because every coin has another side. But there was a post by Carl Quintanilla, anchor at CNBC, and he tweeted out, quote, today's jobs number included 47,000 workers returning from strikes. Stripping out that one-off boost, 49,000 were government, 77,000 were healthcare. Excluding those non-cyclical sectors, the economy only added 26,000 jobs. So my question is, in answering the question of why are people so miserable? Is it because if I'm not in healthcare, if I'm not in one of these sectors, it does seem like a recession to me? Is that a fair analysis or no?
I think, and we've got some slides that we can jump into a discussion around that. But I think generally speaking,
why don't we get into that? Let's roll us into number 2 here.
Where is it?
Basically, well, let me touch on a little bit. Let me back up one slide just to give a little bit of context around this. So, and this Joel dovetails into your question, because I think what we've seen, certainly as labor demand in the last 3 or 4 months, certainly from our vantage point, has continued to decline. And it's really been a pretty persistent decline since March of last year as the Fed hiked and rates have gone up. That has had the very much.
It's what the Fed wanted, right?
Exactly. And so that is absolutely on that first slide. I mean, our view is that the soft landing has been achieved. It's really, unemployment has stayed flat. It actually dropped last month. It's still down at really, close to or at 60-year lows. So unemployment has stayed flat. Inflation has come down and job growth has remained strong. So that soft landing is really very much taken effect. But to your point, Joel, what has really, I think, in a lot of ways, is the debate now is this sort of recession versus a vibecession, and the feeling that a lot of people have.
I like that. That's sexy.
Oh yeah, that's like a vibe session.
I will. It was. I'll give credit to Kyla Scanlon, who's got a great Substack, articles, and she coined this phrase back this summer when the economy was really just chugging along and very positive. Mm-hmm. And yet, when you did looked at consumer sentiment, it was way down, and people were feeling really negative about what was going on around the economy, despite all the positive signs, and also despite their behavior. People are spending. When asked about their own situation, they responded with, "I'm great, but I know that the economy is terrible for others." And so that sort of weird, and I think it's really dominating the headlines over the last 3 to 6 months. So I think that's really an interesting. The stats are clearly, we're not in a recession in any way, shape, or form. Quite the opposite. And yet, there are things that are really driving people to feel pretty sorry. I will say there's that consumer sentiment popped up pretty significantly in December, but that's a very recent measurement. Mm-hmm. So overall, I think that the vibe is pretty negative around the country.
GDP up 5.2%. Who else can say that? I mean, who else can say that? Nobody in the G7 has actually attacked inflation like the U.S. has. The lowest, uninsured rate in the U.S. history. Median wealth is up 37% from 2020 to 2022. I think when you're talking about a vibe session, it really depends on which news channel you're watching and who's in the presidency, right? It's almost hard at this point to get the real story on TV, because like Joel said, if it bleeds, it leads. And even though something's not bleeding, they're going to try to make it bleed.
Yeah, it is. There is a political backdrop to this. People always view if the other party is in the White House, they're going to continue maintain the view that things are not great. That's actually probably even more exaggerated these days, but there's definitely a political element to it. But I also think there's also some genuineness to that sentiment. Inflation, prices are up, and they are bouncing around a little bit in certain things, but prices are elevated. So even as inflation has come down, that rate of growth is slowing. Prices are still elevated, quite, well above pre-COVID levels, and people feel that every day when they are grocery shopping or filling up their car, whatever it might be that they're doing. Prices are up, and that there's a real visceral sort of emotional response to paying more for things in a way that
I have a little story around that. And first of all, to Chad's point, it was really fun. I like to have a broccoli with my steak. So with every MSNBC, I like to check out what Fox is talking about. And it was fun to watch Maria Bartiromo just grit her teeth, hold her nose, and say, "Yeah, things are pretty good right now in the economy," because you knew it killed him to have to say that. But I got my hair cut last week. Saw my stylist. She's in her 20s. She has a child. She's either separated or divorced from the father, and she has her own small business cutting hair, which is pretty cool. Like, she got a loan. She did the whole American dream thing. So I asked her. I said, "How's business?" And I was asking about the hair cutting business, and she took it as an opportunity to tell me how bad the economy was. She says, healthcare is through the roof. My rent's going up sort of unfairly. Grocery store is ridiculous. At Christmas time, toys are ridiculous. And I thought about Brian Sullivan on CNBC talking about the haves and the have-nots. And he said, look, if you have a home, if you have assets, if you have, things that are going up in value because of inflation, like, the economy's great. If you don't have those things are pretty shitty. So I guess my question is, I agree, there's two halves of our country, and the halves that aren't real happy are really not happy. Is it a question of the economy will eventually catch up to them and their wages will go up? Or do you think we'll be stuck in this disparity of unhappy and happy?
Well, it's a really good question, and I think that real wages are up, and they're going up pretty much across the board, and they're actually going up faster in the lower income part of earners. So those demographics have done really well coming out of COVID. I think what is really the issue is that and I'll add to the mix, not only the demographics, it is also a generational thing. I think, Joel, you're exactly right. There are just people who are in the earlier stages of their careers. They're just out of school. They're in their first couple of jobs. They're trying to buy a house, start a family. That is increasingly out of reach just because of the prices that are up. And I think that is part of when the surveys of sort of Gen Z is just even more bleak than sort of the national averages. And again, I think it's that sort of unattainability of the American dream, the way they're feeling. And so I think, and that gets into what are the long-term structural fixes to that. And it's way beyond, wages, and that's a piece of it for sure. But I think, you just dive into housing, for example. I mean, that is one of the absolute just massive supply-demand imbalances and pricing, and mortgages are up. So housing is its own just huge issue that is really, really a tough one.
Yeah. If you have a 3% mortgage and your house is up 20% plus, since 2020, it's not bad. Feel pretty rich. But if you're not even in a home, it's like, I can't even afford it. My mortgage is 6-7% and it's 20% more than it was. I mean, it just seems like an yeah.
Well,
exactly.
But here's the thing. We've talked about this before. Inflation's been up 14% from July 2020 to July 2022. Corporate profits have rose 75%. It almost feels like we need to find some guardrails to be able to define the difference between real inflation and greedflation, because the profits went through the roof, especially during COVID. So, the question is, how do we actually pull this into and under control?
Well, it's shocking that unions are having a moment after that commentary. Like, it's no shocker that people want to unionize and get fair salaries with those numbers.
Yeah.
And that's another really, really interesting debate around sort of in this pandemic era. How long lasting will the gains that employees have made relative to employers, sort of that labor capital balance? And it's definitely has tilted in favor of employees, but and I think there will be a lot of it will persist for a long time. But there's a little bit of reversion to the mean, and really interesting discussion around that. But I think it's exactly right. That was one of the contributors to inflation that I think got probably underweight attention relative to what it should have in terms of corporate profits, and a lot of drivers of inflation, but that was certainly one of them.
Well, and to Joel's point, the UAW had to go through this long ass striking, right? And then as soon as that was done, GM went ahead and did a billions and billions of dollars of stock buybacks, right? So, I mean, it's almost like we're still off kilter. The working man, the working people actually have to work their ass off just to get paid fairly. And then you turn around and it's really easy to get those stock buybacks.
Yeah. Yeah. And I think going forward too, there's going to be this, basically our view going into sort of into December and certainly the first part of next year, there's going to be a lot of increased volatility, I think, as the economy continues to cool down. There will be pockets of layoffs. I think you're going to start to see companies that have some structural issues around them, and lower growth and a higher interest rate environment for a longer period of time. I think there is going to be some disruption and volatility around that. I think it's
Toby, we're starting to hear the prediction around quantitative easing and interest rates coming down. I've heard everything from March to July. I mean, do you have a horse in this race, or are you not getting into that?
I think our view is that the economy is going to continue to slow down. I don't believe that we'll have a recession next year. I think there are too many strengths of particularly around the job market and labor market, not just shorter term, but these long-term demographic trends, labor shortages, retiring baby boomers, some of those real structural things that are going on. You've got there's a lot of things that I think are going to maintain a very strong, resilient job market. So it's hard for me to see how we go into a recession with that backdrop. Sort of leave aside, a lot of other issues around global geopolitics, those kinds of things. But in sort of take some of those exogenous factors out, I think that we don't see a recession coming. I think the big question then, Joel, is, at what point, if inflation keeps coming down and we avoid a recession, at what point does the Fed say, okay, we can take our foot off the brake a little bit and ease up a little bit? I think any
guesses? Any guesses? You want to put yourself out there?
I would say it's going to be long. They'll keep rates higher for longer. That sort of mantra of higher for longer is definitely I would take that view. That I think they're.
Are you running for governor of Minnesota, Toby? Are you running for governor? That's a very good non-answer answer. I like that.
No, I do. I don't see that. I think March is definitely off the table. May is sort of where now the bets are on Wall Street. I would say it's May at the sooner, if not even later than that. I just think they're going to be very cautious about letting up, and as long as the economy is chugging along and things are in pretty good shape, I just don't see that they're going to risk. So I would say maybe late spring, summer, somewhere in that ballpark with the
spring, summer. All right.
LinkUp is the leading provider of deep, accurate, and actionable labor market data. Unique in that we only get job listings from the one source of truth, the employer's website. By going to the source, we avoid all the duplicate and expired job listings that plague job boards and thereby other job data sets. Our data offers the clearest window into employers of all types and sizes throughout the world for an ever-growing number of use cases and applications.
So what kind of insights, what other insights do we have here, Toby?
Another one.
Well, I think the one thing I'd say around that is with increased volatility, and we're certainly, we've seen our labor demand indicators, are the job openings that companies are posting on their career portals globally are down quite a bit in the last 3 months. And they're actually down about 25% new job openings over the last 90 days. So we do think December is going to be below consensus. We actually thought that was going to be the case in November. The job market is going to bounce around, between sort of 0 to 150. I think I would expect, and I should say would not be surprised if we have a negative jobs number in some month, December, January, February, somewhere in there. And I think the key thing is to not expect that there's, to not overreact to a single month. I think the key thing is going to be how quickly, if there are negative jobs, if layoffs start to grow, can the economy, in our view is that it will reabsorb that slack pretty quickly into job gains elsewhere. And so I think the insight that we'd offer is to stay sort of patient, not get overreact to any 1 month, but sort of keep the bigger picture in mind and not get too caught up in any 1 month of data. I think there's going to be quite a bit of volatility, and we're still working through just this massive tectonic shift that's happened with COVID. And I think the world is still adapting to this sort of COVID era and what it might mean as we come out of it.
Don't like volatility, Toby. I don't like volatility. Companies freeze up when things get volatile.
They kind of freak out with it, but I think it's just, there's going to be, there was a good article, I think it was today, with Bank of America economists said, labeled this era as sort of peak uncertainty. And that's where we are at that point in time, I think right now with peak uncertainty. And I don't think any given month is going to be, provide insights into where the economy is going, where the Fed is going, where the markets are going. I think it's going to take some persistent trends before people have confidence that things are heading in a specific direction.
Well, the good news is we have an election and some global conflict, so things will settle down any minute now.
Jesus.
I'm sure.
Yeah, we didn't even talk about that next year. Peak uncertainty is bad right now. Wait until we get into the thick of the presidential race.
Next
fall. It's going to be a crazy year.
Oh yeah, with social media, with the advent of now generative AI, where we can just spin up content faster than anything before, this is going to be a crazy volatile season. Although, from what I'm hearing from you right now, is that we have landed softly. This was not a hard landing. This was a soft landing, and everybody needs to smile a little bit more.
It was
anything else on the slides, Toby?
No, that's pretty much it. It's we're definitely in the positive camp. Things are good, and volatility is going to happen, but stay patient and keep the big picture in mind.
And that's what we're here to do. Keep the big picture in mind. That is Toby Dayton, everybody, CEO at LinkUp. Toby, for our watchers here on YouTube, let them know where they can find out more about the company.
LinkUp.com is the place to go, and we post regular commentary on what we're seeing in the job market, along with lots of other things around our data. But LinkUp.com is the place to go.
Excellent.
Love it. Another month in the can. We'll talk to you next month. We
All
out.
right.
We out.
Thank you for listening to, what's it called? A podcast. The Chad. The Cheese. Brilliant. They talk about recruiting. They talk about technology. But most of all, they talk about nothing. Just a lot of shout-outs of people you don't even know. And yet you're listening. It's incredible. And not one word about cheese. Not one. Cheddar. Blue. nacho, pepper jack, Swiss. So many cheeses and not one word. So weird. Anywho, be sure to subscribe today on iTunes, Spotify, Google Play, or wherever you listen to your podcasts. That way you won't miss an episode. And while you're at it, visit www.chadcheese.com. Just don't expect to find any recipes for grilled cheese. It's so weird. We out!